So hi everyone. Thank you so much for joining tonight. We would like to welcome you all to the third of 7 expert panel discussions for TADS Awards, the world's first annual international awards for tokenized assets and digitized securities. Today's topic will be on investment opportunities in the TADS sector. Now, we do have another 3 sessions after this one, as shown on the screen, that you can also sign up for. So feel free to scan the QR code on the upper right corner to register. And if you have any questions, please do not hesitate to reach out to the TAD team or to Sam. Now, I'd like to give you a quick rundown of today's event. Sam Lee, the chairman of steering committee of the TADS Awards, founder and CEO of CoinStreet Partners, will start off with a really quick information session on the TADS Awards 2021. And followed by that, we will have our expert panel discussion. So with that said, let's give a warm virtual welcome to Sam Lee.
Thank you, Sandy. Hi everyone, my name is Sam Lee. I'm the founder and CEO of CoinStreet Partners, also the chairman of the steering committee of TADS Awards. It's my great pleasure to be here today to share with you some quick information about TADS Awards. Right, okay. Once again, thank you everyone, and also thank you for the panel. I'm looking forward to the panel as well. So TADS Awards 2021. The objective of TADS Awards, it is the world's first annual international awards for tokenized asset and digitized security sectors. It celebrates this industry by recognizing and honoring significant contribution and distinguished achievement worldwide. It brings together individuals and businesses to share the energy that tokenization brings to the financial sector. And it's also nurture the growth of this specific industry by jointly establishing best practices and setting measuring standard for high quality tokenized asset and digitized securities together with other industry leaders on the global markets. We are very glad to host the second year of TADS Awards this year. We have launched TADS Awards last year in 2020. And these are the 10 awards winner from last year. In the TADS Awards, we separate into 2 categories. As you can see on the left-hand side, we have what we call the best of class TADS. This awards category goes to different types of tokens or the asset issuers. On the right-hand side, we have the other awards category called ecosystem excellency. This award category goes to companies providing vertical solutions or services along the value chain. So for example, for the winners from last year, on the left-hand side, best of TADS Awards, we have 5 very good winners. For example, MyBlocks Capital from Hong Kong, we are more familiar with. They are one of the first licensed crypto funds in Hong Kong. And also, for example, Libra Project, who is the winner of the ESG SDG token last year. They are the first approved STO from the ADGM global market in UAE. And also, for example, some of the winners from the Ecosystem Excellence Award last year, such as Securitize, from the token issuing space, also consider a market leader in this space, and such as also Ledger, who is the winner of the digital custodian solution, and so on. So we are very thankful to have very high quality nominees from last year, and of course a very reputable winners as well. We're looking forward to also receive more nomination for this year. For TADS Awards 2021, we will have the same 2 award categories, best of class TADS and also ecosystem excellency. But to catch up with the market trend, this year in the subcategory, we have added the NFT tokens on the Best of Class TADS Awards category, and also correspondingly the NFT platform on the solution provider side. And on top of that, we also have received comments that there are also many good companies who are in the making. So we added the TADS Award Rising Star Awards for both categories this year to recognize the up and coming companies and projects. As you can imagine, the two awards category, Best of Class TADS and Ecosystem Excellency, they are going to different segments of the industry. So the judging criteria for both categories are also very different, right? So the Best of Class TADS Awards is designed with judging category that focus on grading or evaluating of financial products. On the other hand, the judging criteria for Ecosystem Excellency are more focused on judging a vertical solution or service along the value chain. But there's one common factor on the compliance, because tokenized asset and digitized securities are regulated products. So we think even for both the financial product side and also the solution side should also have the checkbox to be compliant with the ecosystem and regulations. In this year, the nomination have started. It will run until end of September. We are planning to have the result announcement in early November, and depends on the situation of the pandemic. We might have a face-to-face award ceremony, or as a fallback, at least we will have a hybrid award ceremony, just like last year, meaning we still have a stage and invite award presenter to announce the result on stage, and we will professionally theme the awards and broadcast globally in such cases. These are our steering committee for this year, and you can find all of them on our website as well. And the organizing committee, and we have a separate vetting and judging committee for the Best of Class TADS Awards, which are composed of more experts from the financial industry. On the other hand, we have a separate judging and vetting committee for the Ecosystem Excellency Awards category, which are composed of experts from the tech ecosystem. We also like to thank our strategic partners who provide very good support for us to organize these awards, and many supporting organizations around the world, and our sponsor, and also research and legal partners. This year, we added a category for regulated exchange partner because we think it's very important for them to complete the ecosystem. And today on the panel, we're also very glad to have Simon from Archix from UK to join us as well. And also thank you for great support from media partners around the world. TADS Awards have very good media coverage globally. So here's the timeline. As you can see, we are running the information session now. In total, 7 of them, and this is the 4th session. And then our nomination will close at end of September. We'll start the judging in October, and hopefully have the award result by end of October, so that we can announce the result in early November, and with the award ceremony hosted at the same time as well. Okay, so if anyone is interested of the TADS Awards or being a nominate your projects, feel free to reach out to us or go to our website. We have a more detailed procedure. So without further delay, I will pass the session back to our host, Sandy, to kick off this very exciting panel of tonight. Thank you, everyone. Thank you.
All right. Thank you so much, Sam. Now let's start really the highlight of today, which is our panelists. So, first of all, we would like to introduce our moderator for today, Brian Tang, who is the executive director at Light Lab at HKU. And for our panelists, going from left to right, going in alphabetical order, we have here, first of all, Brian McNulty, who is the founder and CEO of Fund Admin Chain. And then next, we have Emmanuel Pesanisi, head of digital strategy at BNP Paribas Asset Management, who's also the co-chair of the blockchain committee at FTAHK. Next, we have Simon Barnby, who's the CMO of Archax. And then last but not least, John Lowry, who's a strategic advisor for AppSelect. And so now I'm going to pass it on over to Brian here, who's going to be moderating today's session.
Thanks so much for setting the scene there for us, Sandy, and welcome everyone tonight. Really excited to have and host this panel on investment opportunities in TADS sector. I joke with Sam, do we call it TADS or TADS? We'll decide by the end of the session, I think. Without further ado, maybe can each of you briefly introduce yourselves? I believe everybody has the, maybe we can take away the screens so that we can see everybody. I don't think we're sharing any screens for this session. But maybe Emma, do you mind briefly introducing yourself?
Sure. Hi, good evening, good afternoon, or good morning if we have people in the States, right? So I'm Emmanuel Pesanisic. I'm heading the digital strategy and as well APAC for the digital team for BNP Paribas Asset Management. I'm co-chairing the blockchain committee of the FinTech Association of Hong Kong, and I'm really honored to be the judging committee as well for the TADS Award.
Great. So you called it TADS. We'll go around. We'll see what everybody calls it.
I'm doing it French way,
There you go. Awesome. Yeah. Well, I'm on the FinTech Association board as well, so which is how I know Emma. Fantastic. Simon, briefly introduce yourself, please.
Sure. Hi, everyone. Yeah, I'm going to say TADS, I think, as well. So going to establish that one. But yeah, great to be here. Thanks for inviting me along. Simon Barnby, I'm Chief Marketing Officer at Archax. My background is I've kind of worked in traditional financial markets pretty much all my career. So kind of come from that traditional regulated institutional world. I say I'm now at Archax, and we will be launching our products slightly later this year. And we are the first ever and only FCA regulated exchange for digital securities and security tokens. And alongside that, we're a regulated custodian and a regulated broker as well.
Awesome. Thanks so much, Simon. Next up, can we have John?
Yeah. Hi there. Can you hear me? Good.
Perfectly.
Hopefully. Yeah. John Lowry here. I am an advisor to a SaaS venture business called AppSelect, and I'll be shortly launching, in fact, on the 1st September, technically, which I suppose is yesterday, a new digital type blockchain to crypto business called OneAlts. My background is also, like most of the panelists, I suppose, from the traditional world. In over 30 years in the fund management space, moved into the hedge fund world, private equity business, launched fund of funds, businesses that were subsequently acquired. My latest and last business that I exited recently was a UCITS platform where we helped alternative managers come into the European space through the mutual fund structure, primarily the liquid regulated end of things in the UCITS space. And that grew from a very small amount 10 years ago of several million. We were bringing something we thought new and innovative. So bringing us up to today, there's kind of parallels to that. We got the business last year up to almost 10 billion in assets under management. And it was merged with a larger group called the DMS Group and a couple of other bits and bobs, which is now a greatly enhanced platform called the Waystone Group. So I've been looking at the space for the last number of years, and in terms of blockchain to digital, trying to make some sense of it. And now as a private investor and becoming more ingrained in the area, and love to, very happy to participate.
Great, thanks, John. So really now coming, from the funds management side over to the investor side, investor into the digital space. Last but not least, Brian, can you please introduce yourselves? We joke that it's Brian B1 and B2, so maybe it's BM and BT. So BM, please go ahead.
No problem. Thank you very much for the invite. So Brian McNulty, I'm the CEO of Fund Admin Chain, or as it's more regularly referred to as FAC. I'm likewise 25 years of building companies and servicing the fund managers. So I've been working exclusively in the DLT space since 2015, set up the post-trade distributed ledger group with the London Stock Exchange, and then after that I was managing director at R3. And since 2018 we've been working exclusively on FAC, which is tokenizing mutual funds and private funds and enabling fund managers to do the launch, the distribution, the trading and settlement of those funds.
Fantastic. Thank you, John. So as you've heard, a lot of people from traditional finance now coming into this new age of digital assets and ways of and means of doing things. And by way of brief introduction, I came from that background as well. Trained as a lawyer in Sullivan Cromwell in New York, and then joined Credit Suisse out here, really covering capital markets. So the traditional capital markets, I did IPOs, I should say, right? The big IPOs here in Hong Kong and New York. And then left into the fintech world and tripped over ICOs, which may be less comfortable as a securities lawyer, but now we have STOs, and really excited by the growth of this space. So as we thought about this panel, we wanted to start first with the different asset classes, right? And so with the advent of regulated securities tokens, many new asset classes had started and seemed to lead the way for this new thing called securities tokens, or TADS, right? And there was a recent report that came out a few days ago that estimated that the market to be worth $1 billion in market cap. So initially, sponsors looked more at real estate or at revenue or cash or profit type plays. But today, there seem to be many more exciting categories of securities tokens. So here, of course, we're talking about security tokens, which are distinguished from the more volatile altcoins or crypto and their derivatives, which kind of trade more like currencies and commodities, as well as distinguishing it from NFTs, which could be both. And an increasing number have been identified by PwC as being corporate-directed STOs of big banks tokenizing bonds, loans, and gold. And one interesting new example is the BIS and HKMA recent push for tokenization of green bonds as a new way forward. So Simon, as an exchange, in our prep call, I think you mentioned that you identified like 500 existing security tokens. So as an FCA kind of regulated exchange that's going to go live very, very soon, what kinds of STOs do you see as being more prevalent, and therefore as an exchange that you're targeting as most promising as STO candidates?
Yeah, sure. I mean, we maintain our own kind of register of projects around the world that are, leveraging the technology and looking to issue security tokens. So these are firms that are either have done it or are considering doing it. And yeah, it was an interesting article that came out, saying that the current market is $1 billion. But that is of those that have actually completed and raised some money and exist. I mean, our sort of master list runs to about 500 projects that we've found globally, and equates to probably about $10 billion worth of assets in total. Now, those 500, some have come and gone and maybe have not gone through with the process for whatever reason, so they're not necessarily all in existence. I think we've spoken to probably around half of them, a couple of hundred just over a couple of hundred projects. We have an ongoing dialogue with around 100, and we have 50 kind of lined up to list on our exchange when we launch. So, and looking across all those, I mean, they come from all different parts of the world. So, there's a truly global spread in terms of projects. And in terms of the assets, actually, the underlying assets being tokenized, they're quite varied as well. I mean, probably the four leading ones are, firms just tokenizing their own equity as a way of raising money for themselves, for their projects. People tokenizing debt, bond instruments, which is, I think quite an interesting use case. quite a lot of real estate, as you've mentioned, sort of real estate projects. But more and more we're seeing funds looking to, tokenize, either a fund or create a digital feeder fund. And it's a really interesting use case too, and seems to be a really popular one at the moment. But then, of course, it goes to, people are innovating, and I've spoken to people who are tokenizing everything from, groups of racehorses to portfolios of classic cars, art, diamonds, all sorts of different things. So, it is really allowing people to innovate. It is kind of like, opening up, assets that are probably hard to trade, hard to invest in currently to a much broader audience, and also, bringing liquidity to things that, are maybe illiquid, helping, create or bring liquidity, facilitate liquidity. So that is really interesting too. And of the firms that I mentioned that are tokenizing maybe their own equity to raise money, I mean, they're within those, it's a really interesting mix too. I mean, magnesium nanoparticle manufacturers, which is a really interesting project. Quite a lot of renewable energy projects. Others, involved in carbon credits and ESG type projects too. So it's a really innovative list, across the board, and interesting the different types of projects that are looking for to issue security tokens as a way to raise capital in a digital world, basically.
Fantastic. Thanks for that insight, Simon. So Emma, I think BNP is also very excited about some of these new asset classes, and especially interested in tokenizing alternative investments or illiquids that Simon was alluding to. And I believe BNP recently authored a paper with CAIA and Liquify specifically on that. So what kind of STO projects, I should say, or securities token projects, do you think would have the most traction, and why?
Yes, thank you, Brian. So at BNP Paribas Asset Management, we think that alternative assets are really exciting. Because of their illiquid nature, we think that tokenization can potentially bring further liquidity. But not only, because if you think about it, illiquid assets are often assets that are really difficult to analyze. So when we look at tokenization, we are looking mostly at standardization. If you look at infrastructure debt assets, for example, the token can embed not only the bond or the loan that will issue the large infrastructure project, but as well all the credit analysis components inside the token in order to facilitate the job for the asset manager. So it can, help us, automate things on the credit research process. But not only, we can embed, for example, as well, ESG analysis into it, and potentially, at the end, lower all the transaction costs, right? So that's what we, even on the mutual fund or any kind of space, this is what we are trying to do with the blockchain. So an interesting stat that the audience will find interesting is that the International Institute of Sustainable Development states that the benefit of blockchain could be that for infrastructure project that could reduce the associated cost to a project to 5%. With blockchain versus something like 15 to 22% now. So there is a huge benefit on the cost side that can be seen. And as asset manager as well, we are keen to improve the diversification in our portfolios. So because we are able to finance projects that could be as well smaller in nature, there would be different type of sector. If we look, for example, at the infrastructure or renewable energy market, so as a result, it can bring more diversification as well for the portfolio and for the end client as a result. So that's how we think things, Brian.
Oh, fantastic. So you made my heart sing. My first love was project financing, right? And it's so difficult to do, right? So to extend that this helps boost project financing, especially with climate-related projects, right? Yes. I think that the really exciting kind of possibilities there. Turning now briefly to John. So John, I think, as you earlier alluded to, you're a more traditional fund manager, but now really focused as a family office investor that's increasingly active in the blockchain investment space. So when you invest directly or indirectly in blockchain and through funds, what types of security tokens interest you? And frankly, when you look at your portfolio, do you distinguish between tokens and crypto and security tokens in your portfolio? And if you do, why and why not?
Sure. Yeah. I think we are at a very interesting inflection point. To take it back a stage, if you think about it, the only way to invest in hedge funds really 10 whatever plus years ago was mainly through a Cayman structure. And then in Europe, they sort of relaxed a few things, and then the boom of the UCITS, the alternative UCITS, sort of started to happen at Luxembourg and Ireland, and we indeed played our small role in that. The underlying investor, was a mix. In fact, it was the bulk of our investors we had were not the retail market, which in fact those products were technically available to, being a mutual fund structure usually. They were in fact the traditional-ish, let's say, sort of alternative investors. So they were private banks, some family offices, and they went kind of up from there into the institutional marketplace, because some of those institutions, let's say German institutions, had certain sort of restrictions to do with capital adequacy. And there was a whole big bunch of other type of, rules and reasons why governance being locked up in the Cayman, not hopefully physically themselves, but the actual, their money. There was all these reasons coming down the track. When we bring it up to today and the security, tokenizing a mutual fund, for example, which we've been looking at, it is still, I think, very early. It's happening. My own personal view is, and again, I come from, kind of the, that side of the business, the structuring business. I think we are at an inflection point. I personally have invested more on both the crypto side and also on the venture side, either through vehicles that invest into some early stage, Securitize, Wave, and a few other entities like that. That's how I personally have approached things today. So Brian, I've not yet gone into a tokenized mutual fund. However, there is absolutely no reason I would see for me not to do so. And indeed, I could see lots of reasons that, in fact, it'll be to answer a different way, it's the underlying investment. What you want to get exposure to is the key bit. If we can tokenize it, and if that streamlines it, makes it easier for the end investor, whether he sees it or not, then I think we're all for that. Does that help?
It does, thank you. But I think my question there was actually more about when you invest in digital assets at this juncture. So do you, in your brain as an investor, distinguish between crypto and securities tokens, right? So which is this regulated space, right? And therefore, actually, a lot of those tend to be more stability of fund flow as opposed to high volatility kind of crypto. Yeah,
I do, Brian. And in fact, because of the newness of the security tokens, I've not yet seen any particular reason for me to allocate into those areas. Why? Because the underlying asset, maybe I'm not interested in cars or horses or art, and maybe the bulk of the things I might be interested in haven't yet come on stream on that side. I think is probably,
And that's completely fair, and that's why we were talking about the asset classes, right? So what's going to come on, and from the investor point of view, what you're interested in, right? Because ultimately, when you talk about capital markets, it's whether the investors want to buy, right? And at what price, right? Great. But we've been talking about fund management and tokenizing of fund management, and in Asia, we've seen quite a few crypto venture funds kind of tokenizing themselves for investors. So it's almost like eating from your own kitchen, shall we say, right? So fund management.
I think that which makes a lot of sense.
Yep.
However, Brian, a lot of them that I've seen, and again, I'm not tarnishing everybody on this, but there is a, there is a grab, there's a hype involved sometimes, and you're wondering, are these guys just going down that route because they can't get it, any other way? So, the normal kind of, conservative or whatever it is, intelligent, cautious approach to it will always look at the underlying and, what's the motivation? Is this the best underlying, is this the exposure that I want? Is it a classic LP, structure, and you go from there. Within, I think, the next 3 to 5 years, maybe it's a bit longer than that. I can't see any reason, apart from the fact that they'll be kind of cannibalizing themselves, that the average venture fund will raise through a security token or some derivatives.
Great. No, thank you. So, but if we look at fund management, for example, which seems to be of increasing interest, as Simon had highlighted, let's turn to some of the people that are the other stakeholders in that. So Emma's from BNP Asset Management, right? So you're actually managing funds, and you're now keen on tokenizing some of your mutual funds. And some of the reasons have been mentioned in the past, whether it's been operational efficiencies or cost savings or user experience. So maybe if you could share some color, Emma, in terms of how your management is thinking about this, right? Why are they keen? And then when we were discussing that, there are examples, I believe, of some others that have issued. So who are the competitors right now in the marketplace, and what are the challenges you see for fuller acceptance of this? As you've heard from John, there's some resistance, but love to hear your thoughts.
Sure. So at the moment, we are exploring mutual fund tokenization with a few platforms in Europe. I would say in Europe, because of the UCITS, and the large market it represents, I would say it's more attractive than compared to Asia, for example, where all the fund structure are not necessarily aligned. So that's where we think it makes more sense for us to start with. Then we're looking at it because, as we said, blockchain enables cost reduction opportunities between all the ecosystem. So between your custodian, transfer agent, asset manager, and your distributor, all being in the same ecosystem, and being able to embed the compliance, the rule, and the trading system at the same time. Some of the use case that have been out there are issuing tokenized active mutual funds at the same price as an ETF, for example. Offering a money market fund and an attractive price in order to improve the yield as well associated to it, because the the yield being so low, any tiny bit of cost matter, right? And as well, especially for for money market fund, the fractionalization. So it can enable, further distribution in, especially I would say this one with digital banks, etc. But here, in terms of the challenge we see, for example, for money market fund, if you start implementing, instant or even faster settlement for money market funds thanks to blockchain, because, your assets that you maintain don't have yet the same settlement process, you have this mismatch, for example. So this is, an issue that, needs to be solved. I mean, the full, potential would be there when all the capital markets would be on the blockchain. So back to the distribution potential, it provides the opportunity as well for the asset manager to go direct, to explore D2C or a better B2B2C model, to have the transparency on who is buying the mutual funds as well. So, and for the distributor as well, to have better interaction with the asset managers through such platform, so to enhance, I would say, the network effect. So those are the kind of things we've been looking at with mutual fund tokenization. And we are seeing some of the competitors slowly looking into issuing tokenized shares, I would say. So basically, I don't want to be too technical, but you have two, level, I would say. You have what you call the full issuance, which is, basically you tokenize a new fund all on the blockchain, or you have the sub issuance, which is only a share of an existing mutual fund. And the sub issuance model is great because you can benefit from the current assets of the traditional market, way of raising fund. But the issue is that you need to have two transfer agents. So how they interact between each other, what kind of contract, tripartite contract, and all of that. So this is where you start to have a lot of questions between all the relationship between all the actors in the value chain, and whether is even legally feasible. So some of the challenge we can share with the audience today, I would say.
Fantastic. Well, one of the good things I heard amongst all that complexity is at least they're passing down the savings to the investors, right? So that's always one of the questions,
yeah.
right? But this is a fantastic segue to Brian, because Brian is really trying to address that complexity as in pulling together all the different ecosystem members. So I might hopefully not mischaracterizing understanding what FAC does, but when he described it to us beforehand, I thought it sounded like a tokenized fund launching and servicing in a box kind of solution for fund managers that hopefully brings in all the different stakeholders, but also the challenges of herding the cats, right? So Brian, would love to hear you speak to some of the challenges and some of the ways forward raised by Emma in terms of how we grow this sector, especially when there are different regulatory stances, different stakeholders like trust administrators, and different incentives and the like.
No problem. And maybe just to expand your analogy, it's in a box for fund service providers as well as fund managers, and I think that's key. And I'll come on to that. And just before I do that, I'd be missing a trick if I didn't say, Emma, what are your peers doing? 14 of your peers are now working with FAC, so I look forward to speaking to you shortly to see if we can make that 15. So what this really all comes down to collaboration. I think the things we need to overcome, we all know with any collaborative or any initiative inside the financial markets where we've got responsibility to look after investors' money, the challenges are evolving the regulations and the if you like, the solutions to make sure they're resilient and technically and so on. But largely it all comes down to collaboration. And I will start off with a positive news on the collaboration. If you were to ask me that question 3 years ago, what do we need to overcome? I think one of the big challenges then was the perception that this will eradicate the role of many fund service providers. We've always argued from the outset that this is not a lot of these initiatives where organisations or projects go in all guns blazing, saying we're going to take out the transfer agent or we're going to take out the distributor. Not at all. I mean, we're from the industry. We understand the importance and the granular detail of the roles and the knowledge, but also the resiliency that those parties bring. So from the outset, we've always been looking to collaborate with them, and that's now overcome. We've now got 5 competing transfer agents collaborating with the fund managers on a single network solution. But we've still got a lot of things to overcome. As a team, we need to make sure that we take this new way of setting up a network, onboarding participants, tokenizing funds, tokenizing cash. We've not talked about that. Tokenizing both of those, and having the distributors on there with their layer of data being collapsed, all the TAs sharing the same services. That needs to be thought through and mapped out versus the current state in detail, and then taken to the regulator once we're all clear in the roles and responsibilities and signed off on. So that's what we're doing. We're doing this for real. We're doing it at a level of granularity that's it needs to happen. And then we're ensuring, and this is another thing that has to be overcome, it's not just about FAC, any initiative. You have to design these collaborative networks and softwares in a way that you can actually sign them off from individuals doing separate roles and responsibilities, both from a compliance point of view, but also an architectural perspective technically. And unfortunately, many of these initiatives have been built on quicksand solutions where you can't actually apply that. So we're all learning, but I think that's really what's key to me. If we can, rather than overcome, if we can continue to collaborate and really make sure that we're not kidding ourselves, that the commercial constructs are considered all the way, we can get to those utopia numbers Emma referred to, and fingers crossed we can pass on the costs to the end, the savings to the end investor.
Great. Now, again, because I'm a lawyer, so when you say regulators signing off, right? Maybe if you could share a little bit more color there, because most regulators I know won't sign off on specific structures, particularly commercial, from certain commercial vendors. So what did you mean by that? What do you hope to get there?
Yeah, no, I wouldn't sort of see us as a vendor per se. When I say we're the catalyst for the current market participants to operate in a more efficient way. So it's those organisations that are engaging the regulators with us being in the room as the initiator. And what we're looking at here is, you're completely right. It's more, rather than saying signing off, is the level of resilience and the clarity of role and responsibility that's currently in the marketplace clearer and replicated in the new DLT centric way of doing business. And what does that actually mean? There's a bunch of current rules and regulations that we have to make sure we comply with, but we're also introducing new things. We're introducing the concept of tokenizing an asset and tokenizing cash. So we have to go right into the weeds and work out who's responsible for what, where are those trigger points happening, and then work with the forward-thinking regulators to make sure that we're all clear. What does that bring in as a new risk or a new function, and therefore have we got that part resilient? And we're fortunate enough to be working with organisations such as the Forward Thinking London Stock Exchange to ensure that level of resiliency is factored into what we're moving forward on. But I mean, it takes a lot. Real takes a lot of work, and that's where collaboration comes in. We're like many, we're a startup, so we're fortunate if we've got representatives from all these fund managers and global custody banks and their compliance teams sitting at the table. It means things go faster, and we're really grateful to that actually happening.
Okay, great. And so when you're talking about the so when you're talking about clarifying roles and conditions, are you talking about contractual agreements, or are you talking about the smart contracts, so that you're building it into the smart contract so it's automated and you need that signed off and agreed? I mean, you need the higher level first, and then are you putting some of these on smart contracts as well?
Yeah, yes, you're right, but both and more. That's why and we've been going for many years now, where we've got a lot of this in place, and there's still more to go. We've actually first fund manager launch a real fund with real investors inside the regulatory safe environment this year, and now we're moving to 4 fund managers doing it. So that means that their compliance teams are involved in this to make sure that, to answer your question specifically, they're understanding exactly how that tokenization is working on our platform and where the smart contract is, and picking that apart, and then standing behind, well, what are we responsible for versus, say, a business network operator or the organization tokenizing cash. We've got a tier 1 bank that's tokenizing cash in our network. So it's really picking that apart and then saying, okay, are we actually clear on what the technology is doing and the resiliency of that? What's the networks doing, the resiliency? Now there's a contractual side, as you said. So what does that mean in terms of who needs to contract with who? And what does that then mean in terms of pricing, to make sure, because we are introducing new costs to this future state. We shouldn't shy away from that. We're introducing new costs, but if you look across the basis points that's currently taken out of the network or the value chain, there's a lot that we can shave off and still improve the margins of those service providers and justify these new costs. But we have to make sure that the contracts are watertight as well. So it's legal, it's tech, it's contractual, and it's commercial.
I hear you, which adds the complexity, right? So just briefly, John, have Emma and Brian convinced you that this sector is ready for you to invest as yet in terms of fund management and tokenized, funds?
Yeah, again, like the answer I think to that, Brian, is again, look, as an allocator and investor, you look at the actual underlying, assuming it is the same, net, an LP traditional structure over absolutely. This is, this is the way forward. There's no doubt. And when, do you want to be the first? Do you want to be the early, the frontier kind of guys? All those issues that are just normal in a disruptive kind of scenario. So this is coming. So absolutely, I'll be looking for it to happen. So I had a big liquidity event, the biggest of my life, when we sold our platform, a UCITS platform last year, and I had money to allocate. And what did I do? Well, I went into certain areas. I didn't have that much in the blockchain, digital crypto kind of area, and I'd been looking at it and meeting managers from a whole range of type of people. So guess what I ended up doing though? When I invested across, I was filling in forms and documents and passports and KYC and all the old bullshit that, quite frankly, has to go. And I'm talking. It's maybe easier for me to talk now. I've exited a kind of incumbent platform, but this is going to come across. This is happening anyway. So yeah.
Fantastic. Well,
Brian, if I may just come in for one point there, in terms of investing as a mutual fund, I think, as we've seen, the direction of travel is now almost over the tipping point, where there are so many organisations that genuinely believe in the benefits of tokenization, that we've covered some of them, that this is happening. But there's still a little bit. Obviously, we're doing private and it goes faster, but there's still a little bit of work to be done, as we're all talking about. If you are looking for investments, then there are obviously the options of investing in the organisations that are doing it, and I would be a bit short-sighted not to mention that we're going through a fundraise right now. So John, just please drop me an email.
Ding. Okay, good.
Nice one.
Well, exactly. So look, and John, you were talking basically about RegTech, right? And as Emma would know, I co-chair the RegTech committee here in Hong Kong for the longest time. So I'm a big believer that RegTech, I call it the secret sauce. You need RegTech across all the different products line. But I think this is a great segue for you, Simon, as because what you're doing with the, so we were chatting earlier on about, crypto VC funds and tokenizing the backend, but we, separately, we're also looking at exchanges, right? So the ASX is well known for actually being a mainstream financial institution that's actually trying to, add blockchain to the backend as well, right? Not quite tokenized, but, using the blockchain. So I was wondering, does Archex actually use, while you do focus on blockchain products like securities tokens, I mean, do you actually use blockchain on your backend operationally? And then I'd love to hear your views on adding the blockchain on the backend to existing infrastructure, because I think some of what we've heard earlier on is, incumbents with existing infrastructure trying to add and do a new one, something on top of it, as opposed to somebody like yourself, which is starting from scratch.
Sure. Yeah. I mean, on the kind of blockchain side of things, I mean, so at the moment in security tokens and digital securities, most of the action is really at the innovation end. So it's kind of opening up new asset classes to investors. It's bringing liquidity to illiquid assets. It's those kind of innovation type projects where the focus is right now. However, we believe that the most exciting end game is actually how blockchain and tokenization, DLT technology will actually revolutionize all financial markets in the end, because it is a much more efficient way of operating. And you're right, it's in the post-trade space where it's probably most obvious, because at the moment, electronic trading has been around forever, but what happens post-trade is a bit of a nightmare. It's slow, there's lots of intermediaries involved, everyone's got their own books and records, you get different people have different records, so you get a lot of reconciliation going on and investigation and stuff. So it's all a bit painful. And the beauty of blockchain is that it can provide a single trusted source of data instantaneously about the trade, and so people get the same information at the same time from a trusted source. So it has the potential to, disintermediate the post-trade process, improve it, make it faster, remove friction, much more efficient. I mean, so we think that's really exciting. However, regulation will have to change, regulation will have to evolve for that to, realize that dream. But, that will happen in time, and it's not going to happen overnight, and it's going to take some time to get there. You're right, though, a lot of the existing exchanges, traditional exchanges, have projects where they're looking at blockchain. I mean, SDX, the Swiss 6 initiative is really interesting. They're kind of rebuilding, their market on digital technology. You're right about the ASX, who've had a project to introduce blockchain for post trade. But for existing exchanges, it is quite a it's a big project to move from one incumbent sort of technology that's been around forever and the processes around it, to move across to it takes time. And we are lucky, I guess, because we're starting from scratch with a clean sheet of paper, so we can kind of build for the new vision, really. And we are, we're blockchain agnostic, so we don't mind what blockchain's been used to create a token, but they can come and list and trade on our exchange. And actually, once they are trading on our exchange, they're actually off chain. So the trading is taking place within the Archax ecosystem, and it only goes back on chain again sort of after trading takes place. So there are no gas fees or things like that. But blockchain will be an important part of our post-trade solution. As I say, it will take time for that to become prevalent and to become implemented across the industry. But we certainly believe that will happen. And I guess we're positioning Archax to be at the very forefront of that. As a regulated marketplace that kind of can embrace that and help promote it. Yeah, so it'll take a bit of time, but we think it will definitely happen, and I'm sure we'll reach a tipping point when it'll suddenly become prevalent. And you only have to look at other industries where technology has revolutionized them. I mean, in our warm-up call, I talked about the music business, where we all used to buy vinyl and then CDs, and then we were downloading music, and now we stream it without even thinking about it. The actual content, the music, hasn't changed at all, but the way we consume it and the underlying technology has kind of revolutionized the way that we consume it and can get access to it. And I think it's the same in financial markets. So far they've been electronic for a long time, but they haven't really been natively digital and leveraged the benefits of being natively digital. And we see that as what the exciting thing to come is.
Fantastic. Thanks for that. And it makes total sense, if you're talking about digital assets and using blockchain to use it on the back end as well. So we look forward to that roll up. But as you say, it's one step at a time, right? Especially from
Exactly.
a heavily regulated market. So as we get to the end of the hour, I wanted to close off by talking about investors. So this is the investment panel. So I've been involved and looked at this space for a while, and we've been looking to see which kind of investors really will end up being the core of the investor base for security tokens and STOs, right? When some of the original kind of products were coming out, they all seem to be asset backed. And a lot of them, for us old timers that came from traditional finance, I was like, that sounds like an asset-backed securitization, or that sounds like a REIT product. So would they be investors along those lines, which are very different from a typical kind of crypto investor who loves volatility, right? What will the investors be different for primary versus secondary markets of these? Because now we're looking at the STOs, so those that went in early. But as we all know, these are called liquidity events, as John is lucky enough to have one recently, although not through capital markets. But with the liquidity event, people want to exit, right? So are the investors different primary versus secondary? Are they going to be more family offices, or maybe hedge funds, or long-only institutions with longer time horizons, and maybe are not as active traders in these new kind of security tokens? And then lastly, most jurisdictions, including here in Hong Kong, looking at these markets primarily or only for professional investors. Is that the way forward? And I know that there are some markets that do allow for some retail, and Simon, would love to hear some of your thoughts about how the FCA does allow for some of that. But maybe let's go around the room a little bit on the different types of investors you think that will be the main ones for security tokens. And it may be an unfair question because it may depend on the asset class. And so you may say, a lawyer, it depends. But maybe, Emma, can we start with you?
Yeah. So what we discussed in the white paper we wrote with Liquefy and Kaya, it's a cascade, if you want. So it will open, opportunities that institutional investors have to smaller institutional investors, right? Then what small institutional investors have will be more accessible and more liquid. So then it will enable, high net worth individuals and private wealth clients to access them. And for retail investors, they will be able, for them to access as well a fraction of that in a more liquid and fractionalized way. Then, so that's, for us, the overall view on, I would say, what is today more illiquid assets. Then if we talk about mutual funds, what, we think is like, it's really, the purpose of that is to broaden the access, right? So really retail for mutual funds, enabling, people to access further, capital markets in order to prepare retirement, etc. So yeah.
Awesome.
That's my
No,
answer.
thank you. John, as an investor, thoughts?
Yeah, I'd agree with them there. I think the early adopters, and again, I think you can look back to the the hedge funds moving to the mutual fund structure. At least our experience was they were that sort of semi-institutional players who so they would be private banks, wealth managers, maybe less the private banks, depends on how aggressive they are, more the sort of more aggressive end of the wealth managers and the family offices. I would see them being the logical place to be the initial sort of thrust over the next 18 months here. The institutions that everybody talks about, is Mike Novogratz an institution, is Elon Musk. When these whales come into the crypto, we hear this bullshit about, the institutions are coming. Yeah, they kind of aren't really. But anyway, I think they will come. But I think there's a number of things need to be, the wallets, I think that's probably a couple of years down the road for me. So that would be my guess on it.
Okay, cool. Thank you, John. Brian.
I think it does depend on the use case, but just at a high level, I think that aligned with the other guys, it's going to be VCs, family offices, hopefully, because that's why we're largely doing this. Over time, it will open up to more to provide more inclusion and more cost-effective and efficient products, and ultimately the secondary trading venues to also open up, not just from a regulatory allowing it, but we're not there yet. The services that are needed to do that at a cost that we can actually encapsulate into the markets, and also to look after not just the money, but the things like the keys, for example. That resiliency is not quite all came together to give us that trigger point, but ultimately that's where it'll get to. And hopefully it's not too long until we make it more inclusive beyond those that currently can access these products.
Here. And last but not least, Simon, who's at the front end of this, because before long, you're going to be looking for these people to start investing in these security tokens. So what do you see?
Yeah, I mean, to pick up on John's point, yeah, I mean, the institutions haven't arrived yet, but they are coming. And one of the reasons they haven't is obviously because Archax hasn't launched yet. But joking apart, I mean, no, there's an element of truth in that. I mean, the infrastructure needs to be there. The regulated infrastructure needs to be there. So, and we are part of that. So, I believe the institutions will come, but, it'll take some time. I mean, one of the most exciting things about tokenization and security tokens, I think, is democratization of financial markets. So, it's enabling people to get more direct access to more markets more easily. And, I think that's a really exciting thing. I mean, we are talking to people about becoming members of the Archax exchange, and that's, everyone from, professional investors. A lot of brokers are really interested because they want access to new and interesting asset classes for their clients. A lot of the hedge funds are interested too. So, I think ultimately it will be across the board, but I guess at the moment the focus is more the sort of niche players, the people, the early adopters. And as I say, with democratization, I think is really exciting too. and access to global markets too. Things that have been pioneered in the crypto world with 24/7 trading globally. Those are interesting possibilities that that the technology potentially unlocks. And to your question, your point about sort of retail investors, I mean, I think it's interesting, and it varies from regulator to regulator. I mean, I know in Hong Kong there are some limitations around what digital assets can be done, how you can handle them, and who you can offer them to. And similarly, in the US, there's interesting regulations around custody of them. I mean, in the UK and with the FCA, I mean, they basically their sort of stance is that in the end of the day, it's just a security. The technology is different, but it's just a security. So there's lots of regulation with the FCA about what you can do with retail users, how you can promote things to them, and having the right permissions to promote things to the retail audience. But whether it's digital or not is kind of incidental. It's just different technology. It's the same regulated instrument. So it's complicated. And again, this kind of this matrix of regulators around the world, all with slightly different opinions and stances and regulations and rules in place, makes it complicated. But I guess that's what those of us that are building this new capital markets infrastructure have to solve. And you mentioned earlier how fast ICOs took off, and it was like wildfire basically. But that was really because there was no regulation to slow things down. Once regulation kicks in, like with things like security tokens, then things take longer because it's a more complicated landscape to navigate. It takes time, but it will come.
Indeed, and some might in our circles joke, lawyers for the win again, right? The lawyers are needed here. I mean, if you look at, I think that the latest news that was circulating is Binance is now on some watch lists, right? So again, for me, when seeing the rapid development, it's only when there are harms, then law and regulators step in. Do they over-regulate? That's what we hope they don't do, so that it doesn't impede upon innovation. And again, that's one of the reasons why, at Light Lab, where I am, we're looking at the intersection of law, technology, innovation, and entrepreneurship, right? How do we try to meld all those together? So this has been a fantastic panel. Thank you also very much. As we close things off, maybe in the spirit of what Simon was saying, so what if there were a crypto fairy godmother or godfather, because we're gender neutral, what would be on the top of your wish list to ensure that securities tokens and that investment market will flourish in the coming years? If you don't mind, I'll start with ladies first again, Emma.
Thank you. I didn't have the time to think then.
I did warn you. I did give you the questions. Yes.
Yeah. So yeah, I think more regulation actually. I mean, in order to make it more accessible for large institutions like us. Yeah.
So more regulations, did you say?
Yeah, more, so that at the end we have more clarity, so that we can do, I would say, more stuff in a clear environment.
Makes sense to me. Brian.
I was trying to think about something that's a little bit different. For me, one thing would be how we look at allocation of budget and resources organizations. Obviously, in our case, we're talking about fund managers, fund service providers. And it's completely logical that the resources allocated to the initiatives that give a quicker return on investment, and anything that's more further out tends to join a queue or get a red line through when it comes to the budget analysis. But I think we are at a very different point right now, whereby there's an opportunity, if I zoom in the fund manager's lens, for them to get involved and to allocate a bit more resource to the tokenization of mutual funds or what other initiatives are more pertinent to them, and to move the dial. And move the dial not just in terms of mitigating the threats that are creeping up on them, but also move the dial in terms of being in control of the destiny of the future state that they're participating in, the products and the services that they provide. And if they continue, some of them, to take a watch and brief like they're doing, whilst they're allocating their budget on just basically all the trenches they've got around them, they might the opportunity might be locked, might come back as just a service that they need to sign up for. But the opportunities to invest in these initiatives, or to control them, or to have a seat at the table, are now. And I would like that fairy that you're talking about to make them think a little bit more strategically about their use of resource and budget.
Right, got it. So more thoughtful thinking of where funding is allocated to allow for the ecosystem, and to think about where the costs are, right, and what can be saved, and how to allocate it. John, what would be your wish list to grow the securities token ecosystem?
Yeah, I think there's a couple of things that need, well, time is one thing, collaboration between the different parties. It sounds like, in fact, you know, people like Brian's organization and, you know, Emma's are actually doing a lot that I wasn't really that aware of behind the scenes. But I think a lot more of that is needed. You know, bad products. There's bad products across every industry, I suppose. There's bad products, you know, bad investment ideas are floated every day on the stock exchange, doesn't stop it. However, given what happened with the ICO, you know, with the boom and bust there, you know, that's a question I have. And, you know, the standards of control over, you know, what's put out there is an issue, is a question for me. I don't know how you really control that. It's difficult, but, you know, DeFi and kind of that's the other camp in a way. You could argue, well, you know, we throw out the whole system, you know, the current financial system, and that's the other way around it. But that is coming, you know, and so it's a really interesting question. I don't have the answers, but I've some questions.
Okay, well, it wasn't an answer. We were asking a wish list. So if somebody could grant something, right, what could be done? But I think you raised lots of great points there. Last but not least, Simon, over to you. What would be on your highest on your wish list?
Yeah, I mean, I'll answer the question slightly differently, and I'll tell you what the milestone that I look forward to the industry reaching. And that milestone is the point when we don't talk about the underlying technology anymore. You know, we just accept it, that it's there, it's the way of doing things, and we worry about the business, the use case. I mean, I always think, you know, when we send an email message, we don't care about what SMTP protocol is being used underneath it. When we browse the internet, we're not worried about TCP/IP. We just get on and do it. And I think, you know, the milestone I look forward to is when, you know, we've kind of moved on from talking about the technology. It's important to talk about it now and worry about it now, but when the technology is just accepted and it's the way of doing things, that'll be a great sort of moment for the industry.
Sounds great. That's a different way of saying what some of us have been saying in the fintech space. So in 5 years' time, in 10 years' time, nobody will talk about fintech because it's just tech, right? That underlies the way that we're doing things. And so we're less focused on the tech side of how things are done. And we just focus on, as you say, the business models and the way of doing things, and being human-centric and being targeted towards addressing real needs and wants in our society. Thank you also very much. It's been a wonderful evening. I enjoyed it a lot, and I hope you enjoyed it as well. And I hope the audience enjoyed it. If you're here, Sandy, over to you. Will you be closing things off? Would you like me to close it?
Thank you so much, Brian, and to all the other panelists. That was an extremely insightful discussion. And of course, to everyone here, there are more sessions to come. So please, 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 if you haven't already, go check out our future sessions and register for them. Now, the recording of this session will be posted on the website a week from now. So if you're interested in catch all of it, or maybe if you want to send it off to someone, feel free to make your way to the TADS website a week from now. And of course, we hope you enjoy the rest of your evening, or wherever that, or morning, afternoon, wherever you are. And we hope you have a lovely rest of the day. Thank you so much, everyone.
Thanks, everybody.
Thanks.
Bye-bye.
Thank you.
Good night, good afternoon, good morning.